First off, I want to tell you about a new program that we're offering for pre-approvals. So we're getting into we already are. There are multiple counteroffer situations. We want to have the strongest pre-approvals you can possibly have. So keep in mind that we still are offering the ability to run a loan through the automated underwriting system that we have to get an approval and try to get appraisal waivers before you make an offer. So if you know the address of the property and you're doing 20% down or more, and you want to see if you can get an appraisal waiver, here's an example. If the property is listed at 700 and you want to offer 720 to beat out somebody, okay, or offer 720 to get concessions, and the borrower's putting 20% down, we can run that at 720 to see if we can get an appraisal waiver even above asking. So there's some really cool ways of using this as a strategy on these appraisal waivers before you make the offer, to make it really look great. That way you can waive the appraisal contingencies. And with this right here, this platinum approval, we're going to waive the financing contingency as well. And the way we do it is this is a fully approved pre-approval through underwriting where we review everything. And we're going to give the sellers a guarantee. We're going to tell them this offer that you're receiving right now has a guarantee behind it. If we don't close because the lender made some sort of mistake and we couldn't get financing, the lender is going to give you, the sellers, $5,000. So we're putting our neck on the line here, but we know that when we do a pre-approval, it's solid. It is hard. It is platinum. It is perfect, right? So we're offering this guarantee for $5,000 that the sellers will get in their pockets if we fail to close because of we couldn't get the mortgage approved because of something we did on the lending side. So I think it's fantastic. We're going to really need to spice up our approvals. So appraisal waivers, if you're doing 20% or down more, definitely let's do that. Let's get the financing contingency waived. Let's try to waive as many contingencies as we can to make our offers stand out. But it does take the effort of the borrower. If the borrower is non-committed to a lender, then it's going to be hard to do this, because if they don't send us everything we need, we're not going to be able to do this platinum approval. But it's a great program. Super excited about it. Does anyone have any questions on it? Wow. Okay, I explained it perfectly. That means I should be a teacher. All right, well, anyhow, I'm moving on to the next to see what, guys, is happening with interest rates. So here we are. PCE inflation came in last week. It was at 2.49, which is pretty mild. It wasn't great. It wasn't bad. It was kind of middle of the road, a little bit less than expected, but not a huge amount. So that is a good thing. So we saw better than expected reactions to the markets. And here's where we are. This is the inflation numbers, the current. So we're at 2.83. May of 2023. So we're talking last year in May, we were at 0.288. So if we take out that 0.288 and add back in the new one, what we're expecting for May 2024, we're actually going to be at a 2.755. So we're going down in inflation. However, so that's a good thing, right? Inflation going down is a good thing for mortgage rates. We'll kind of show you in a second kind of where they're going. But what is the prediction for the rest of the year? This is where it's going to get really, really interesting, because the way that we calculate inflation is based on a 12-month average. So 12 months ago, we're going to take away that number, strip that number out, and add the new number in, and then re-average the new 12 months, right? So what's going to happen next month? Here we are. So here's a breakdown of what it's going to look like. And we're at if you look at, pardon me, May, we're going to be going down to 2.75, but look at the estimate. Okay, so if we have an estimate of 0.2, so that's good, right? That's what the feds want. If the feds get what they want and we have inflation at 0.2 per month, then actually this is a little higher than, but this is what we're expecting, a nice low number. We're going to be replacing a 0.172. So that's going to make inflation numbers actually look like they're going up because the new average is going to be 2.783. So that right there is not a good thing. It's a bad thing, but it is pretty mild inflation. And then the July, if we have 0.2 again in July, we're replacing a 0.12. So when we replace a 0.12, it's going to go up again. And look at this trend. If we're really good in inflation at 0.2, we're going to be replacing all these low numbers said about 1 month, September of 0.329. So we're going to be 2.8. We're going to go up almost a 3, 2.8, 2.8. And then again, November of December, because we're replacing really low numbers with higher numbers, even though it's good inflation numbers, it's still going to go up. And the Fed, remember, the Fed wants a 2% handle on this year over year PCE. They want 2% before they start cutting. So the question is, will they start cutting interest rates based on where inflation is projected to go and that alone? Probably not. So where are we going to look at? We're going to be looking at the employment numbers as the only reason why the feds will be cutting interest rates sooner rather than later. So if we know that the inflation is going to be sticky and we're going to be in the high 2s and 3s through the end of the year, we're not going to really bank on that unless we get a really good surprise on some of these estimated numbers. Just expect inflation to be blah, no real movement over the next several months. Okay. We really want the unemployment numbers to go higher. What's that? Oh, sorry, I thought I heard something. So we really want the unemployment numbers to go up. That is going to help trigger the Federal Reserve to start cutting interest rates. That piece of the economy getting softer is what we're really, really leaning on for lower rates as we go. So where are rates right now, you may ask? Well, let's have a look. This is the bond market the last couple of days. So last Thursday and Friday, really good days. Again, that's when the inflation numbers came out. Really positive numbers for us and some weakness in the economy. Today, we saw the manufacturing index come in weaker than expected. So if you look at the numbers today, we're very good. So we ended above the 50-day moving average. The bond market going up means rates are getting better. So 3 days in a row of positive movement. This last week, guys, all of these negative numbers were because of really, really bad auctions. Remember, the government needs to raise money to pay for all of their spending that they want to do. And when the government spends money in the economy, it keeps inflation levels high and it keeps everything going. So they sell all these auctions, they raise this money, they spend it. That's what our government does. They don't have their own money. So these auctions, nobody wanted them. So they were very, very poorly executed and they did not go well. And when you have to raise the rate on something, on the yield of something for somebody to buy them, that's not a good thing. That's inflationary. So what happened was the bond market lost quite a bit last week because of it. But we're almost rebounding all of it based on the good news with inflation and the weakness in the manufacturing numbers. And we also had some weakness in the jobs last week as well. So we're right up against this new Fibonacci level. And we've got the 100-day moving average. We want to try to pierce through. If we can get above this, that would be great. So we're on the right track for better rates this week. At least we're starting it good, starting it in a good position. So that's always a good thing. So where are we? I'm going to start with the bad. If you're a buyer that has mediocre credit and you're doing 5% down on a conventional loan, 680 credit score, you're going to be looking at a high 7s. So remember, your credit score is the biggest determining factor in your rate. So look at FHA, you're in the low 7s. Big difference if you have a lower credit score. Now, what happens if you go higher in credit score? That rate starts to come down on a 30-year fixed. Even better credit score, and you're in the 7.336. Now, looking at what's happening in today's market with the bond market improving, we should get about an eighth better in rate by the end of the day. So this will probably be 7.25 tomorrow morning. Now you can always get a lower rate. You can always, I mean, it's not very much to get a 6.875 or 6.99 rate right now, as far as paying a little extra discount points to get there. But rates will be eventually dropping. We don't know when. I'm thinking a year or two out, everyone's going to be refinancing. So you don't want to pay too much in points, but this is kind of where we're at as far as interest rates go. So what's happening now this week? So we have the ISM manufacturing numbers came out today. They were actually a lot lower than expected. That's why we're seeing a little bit of a positive move for interest rates. Remember, when there's bad news in the economy, it's good for mortgage rates. So we're looking at bad manufacturing numbers and lower construction spending. So a little bit weaker signs for the economy. That's a good thing for mortgage rates. Tomorrow we have factory orders and then JOLTS report, which is the job openings. That's going to be interesting because we'll see how high those are going. And then we have ADP payroll changes. Bank of Canada is talking, it's like Federal Reserve. We have ISM non-manufacturing on Wednesday. And then jobs, we have some jobless claims. We've got a lot going on Thursday as far as employment goes. So that might be a good day for interest rates. So we're going to really keep an eye on the jobs and the payrolls coming up this week. But it's basically jobs week. So we're going to be looking at that really closely. Remember, poor jobs numbers means it's good for rates. So we want bad news in the economy to get mortgage rates better. It's horrible to say that because all of us want a good economy, but to get interest rates lower, we do need to break a little bit. So jobless numbers, we want to keep an eye on those. But what I want you to focus on too is really dig into the details when they're talking about the jobs openings and look at, are they full-time jobs or are they part-time jobs being offered? And are the new jobs being created full-time jobs, or are they people getting second jobs because they can't afford life? And that's what's really happening right now. More people are taking on a second job because it's expensive to live. So when the news is reporting all these new jobs, all they're saying is, yes, there's a new job that was created, but that person already had a job and now they need a second job to pay for everything because of inflation. Is that a sign of a good economy? Well, to them, good jobs numbers is yes, but in reality, it's no. So those cracks are showing. We're going to continue to watch that carefully. But that's it for what's happening this week. And I'll open it up for questions. Does anyone have any further questions on the platinum approval and how that is going to work moving forward? Anyone have any weird scenarios that you're running into, or any questions on the industry and the marketing or on the mortgage industry that you have right now? Maybe something you run into that you're scratching your head on. All right. Well, it must be hot out because a lot of people are on vacation right now. And if you are on vacation, enjoy it, get out of the heat. But if you don't have any questions, enjoy your week. Let's hope that rates continue to get better. Let's hope by the end of the week, we're in the sixes without any points. And enjoy your week, guys. I'll stay on here if you have any questions. Otherwise, enjoy your week. Have a wonderful day, and we'll talk to you guys soon.
Hey, Sean, I got a couple questions for you.
Sure thing.
I have a listing coming up. There is some chipping, very minor, but it is quite a bit of exterior chipping, peeling paint. And it's kind of a estate type thing where they don't have a lot of money to do the touch-up painting and what would need to be done. So is that not going to be able to go FHA?
Possibly no. It depends on if the appraiser points it out. So if the appraiser points it out, then we're probably not going to be able to go FHA unless they remedy that.
Right.
Conventional, we can do it all day long.
Sure.
But it just depends on if it's that bad where the appraiser points it out. I would try to do lipstick on a pig kind of a thing until
I know
before the appraisal. Like just get a pressure washer out there and just like maybe, I don't know, a little bit of spray paint.
If yeah, spray I know. We talked about it. Unfortunately, underneath the eaves, they used that kind of pressure fiberboard type stuff,
Yeah,
and then they just painted it, and so it's flaking.
yeah.
And so I know that's not going to work. Is there any difference between VA and FHA when it comes to that kind of paint? Are they both about the same?
They're both about the same when it comes to the paint peeling. Um, what year is the home?
Let's see. I think it was nineteen ninety
Okay,
one.
so no lead-based issues.
No, no, no.
We may squeeze. I mean, appraisers miss things a lot. We see that all the time. So it just depends on the appraisal. I would bank on the fact that it's probably going to be pointed out. Um, but what's the price point?
It'll be 460.
Okay, because you may get an FHA buyer on that. Um,
I know. I'm trying to decide whether I should put on the listing because it's not listed yet. Whether I should put FHA and VA or if I should just say, conventional cash only. I'm trying
I would
to.
I would take pictures of the paint
Uh
and
huh.
have that in there just so people, oh, you don't want to point that out though. Like here,
What
look at my
about,
listing, look at all these flaws.
Yeah.
Um,
Sean, what
yes,
about, tell us about that. Is it a 203K FHA,
we
like a
could, yeah.
renovation FHA? Because I
Yeah,
have an estate listing now, and I didn't put in the MLS, I didn't check the FHA button, but in the comments I said, she's fine with the loan. We just might, because mine's super minor, but she's like, I'm not spending a dime. Like if they
yeah,
want a GFCI, not doing it. Like
yeah.
not.
So 203K is absolutely an option if you have a little bit more time on the transaction.
Mhm,
So if the seller's okay with a 45 to 60-day close, because keep in
mhm.
mind you need to get bids from FHA approved what are they called? Contractors.
Vendors. Yeah.
Yep. And then you need to get those into us. We need to review them. And then, so there is some extra time on those, but it's absolutely an option.
Mhm.
And if if there's a property that has more than that, that may be a really good solution. Um,
Yeah,
that
that's
somebody could come
all.
in.
There's nothing else really wrong with it. It's just, the family just can't put any more money into it,
Yeah.
and it's, you know,
I
it
mean, we
it
could do an escrow holdback as well.
you can, and that'll work for FHA.
Well, if it's not, no, because if it's in the appraisal, it has to be remedied. So it really just depends on the appraisal.
Mm,
But if it's a 203K, I mean, we can there's two types of 203Ks. There's a minor and a major, basically. The
mm,
minor is really easy to do, takes a lot
mhm,
less leg work, and we can do that. Um, that may be the solution if it's really bad. So if the seller is willing to go maybe to 45 days, worst case scenario for a
mhm.
203K, the
Yeah.
minor one, then yeah, we can do that. So
So,
Melanie,
I
good
have
work.
another option. Well, I have
Yes.
another option too. You could find a painter that is willing to get paid from the proceeds.
right.
Yeah.
That's
That's
true.
an option.
Yeah.
I
So we
Yes.
can have
also,
invoices. We can have an invoice through closing for the seller's side to do anything. Here's one thing. Here's an example. If you have roofing issues and the listing agent is going to pay for them, you can pay the appraiser through closing and have the work done post closing as long as it's not pointed out in the appraisal. That's key.
okay, another option. I've done this only for people, that I trust and know, but I obviously get a written thing. I had a situation where the house really needed the flooring replaced. Like it was, I mean, they were clean people, but they had 4 dogs and 3 cats, and it was not a good situation. So I paid for the flooring. I actually had it painted as well. And then I was just paid extra commission, or actually they paid it separate. I'm not sure how the tax man's going to look at it,
Yeah.
but I was paid back every invoice that I paid at closing. And I really feel like, we got the price probably about 30,000 higher than we would have gotten had we not done that. And
Yep.
Mhm.
it's like anything. We have a house under contract now, but we would have had 2 other contracts if we were able to go FHA. And that was a
Mhm.
different situation because it
Yeah.
has a 5 people on the well. But the point being is, like anything, right? The more people you open it up to,
Of
the
course.
better.
Yes. Yeah.
So just
Yeah.
some
So I think,
ideas.
Yeah, maybe what I might do is just put FHA, but not VA, just
Yeah,
because
I wouldn't
we know we
exclude
have
either.
that.
I wouldn't
Oh,
exclude
really?
either one. Have
Really?
you had a bid? Have you had a bid that pops up to see like how much it would cost or like a estimate to just,
I just had my listing meeting with the folks and they're going on vacation, but I asked them but I could reach out to a painter too because they can just walk around the outside. Um,
I mean, because if it's like a
and
couple $1,000s worth of work, that maybe,
right,
but if it's like maybe $300 or $400,
yeah. Yeah, no, I'm sure it's going to be more than that because it's going to end
yeah.
up being it's enough work. It's enough like it's a horizontal siding and the edges for
Oh,
probably
okay.
at least 3/4 of it have little flecks, and then you've got the whole soffit all the way around.
Oh,
So
okay.
I mean, so it's almost like it's gonna have, but then they're like, well, what if we paint it again the same yellow, and they don't like the yellow, and so they really, they're saying like they really don't want to deal with it. So it's kind of like hard to know what to do. But I could throw it out to VA and FHA and just see what happens, I guess.
Yeah, I mean, you want to make sure that you're at least when in the inspection period making, or like when you go under contract, um, well, they're going to see the property. They're going to go,
Yeah,
if,
they're gonna.
so
Yeah.
yeah, if they
I mean,
see it, then
if I got an offer, I would have to have a conversation with the
exactly.
buyer's agent and say, okay, you realize this is what's going on. There's a risk, and I'd have to present that to the sellers too. To say,
Yeah,
we may be taking it off the market for nothing if we have a bad appraisal. So those are the
exactly.
things. But 203K is something to talk about too. So
For
yeah,
sure. For sure.
Also,
yeah.
are
Okay,
you
well,
are
that's
you
been
in the
happy to
Phoenix
help them.
area?
No, we're in Prescott
Oh
Valley.
darn, because I have a painter and he just got paid through. He was great, and he
Yeah.
just got paid through closing, and it was awesome
Oh, right.
because
Thank
we
you.
just got it done. Yeah. So if you're ever down here, we have one.
No. I try to stay in my lane. But actually, another thought we had was leave it for, a little while as just conventional and cash. And then if we don't get any bites,
Yeah, you can do that.
revisit the whole painting idea. So that's another option because, we may find somebody, it's a nice single level home in a nice little neighborhood. So it's a little dated and they got an appraisal, and I don't even know how it appraised for 454, but it was because there's family involved and they wanted to know, whether it's worth 400 or four whatever.
Sure. Well,
So
keep in mind
anyways,
if you,
there's a lot
if,
of people that we have to satisfy through the whole thing.
yeah. So
Yeah.
yeah, 203K, if you're going to pay for it through closing, it can't be mentioned in the appraisal.
Yeah.
Let's just hope
Okay.
you get a lot of conventional offers. I mean, that price point is a pretty hot price point, so you may go quick.
Yeah. Yeah, I think, I keep going back and forth, but maybe what we had originally talked about when I met with them Sunday was let's do cash and conventional and see what flies. Yeah. All right. Well, thank you. That was very helpful for both of you.
You're very welcome. Somebody had a
All
question on
righty.
what's PCE. It's PCE, that is personal consumption expenditure. That's the cost of everything we buy on a daily basis.
Interesting.
Yeah, so
Well,
that's the Fed's favorite level of inflation. Like, how much is toothpaste now, or how much is food? How much are eggs? That kind of a thing.
everything has
Insurance.
doubled.
Yeah, yeah. So the
Terrible.
problem is inflation. So everything's doubled. Inflation rarely goes the opposite direction. Things are never going to get cheaper
Nope.
unless we have a deflationary market. So when people hear lower inflation, that does not mean prices will come down. That means they're getting more expensive at a slower pace.
Right. Got it.
So when people think, oh, inflation's coming down, in their mind, psychologically, it kind of feels like, oh my gosh, that means prices are going to get better. Nope.
Mm-hmm.
Get used to it. This is where prices are for everything. We need to figure out a way of living with it because they are going higher still, just at a lower, slower pace.
Yeah. Thanks so
That's the
much,
part.
Sean.
Yeah, anytime.
Alrighty. Appreciate it.
Thanks, Melanie, for your advice this morning. That was words of wisdom. All right, guys, have a wonderful week. We'll talk to you soon.